Good afternoon, everyone, and welcome to Stock Market Today. Ali Korm and Justin Nielsen here with a look at the action in today's session with quite a bit of selling in tech stocks, especially Justin, and a lot of bleeding into the close.
Yeah, there certainly was. And even when it wasn't looking too bad, there was certainly a lot of individual stocks that were looking very poor. So we'll take a look at Asana, that's in the software space and was really hit hard. We'll also take a look at some of the bright spots. Steel stocks not doing too bad. So we'll take a look at Nucor, ticker symbol NUE on that one, and also the financials looking strong. So we'll take a look at the ETF, the Sector Spider ETF XLF on that.
Yeah, so some signs of sector rotation to discuss. Well, first, let's take a look at the index action. So here we are showing QQQ, which tracks the NASDAQ 100, down 1.2% by the end of the day. The NASDAQ Composite down 1.3%. The S&P 500 down about 0.3%. And then small caps down about 0.5% by session's close. And then the Dow eking out a slight gain today, Justin, but very notable were the big downside reversals that we saw for both the NASDAQ Composite and the NASDAQ 100 after getting to some pretty lofty levels towards the beginning of the session.
Yeah, while we were on IBD Live, things were starting off really strong, but we were getting a little nervous because we were hitting that level of being more than 8% above the 50-day moving average line on the NASDAQ 100, which we usually use the QQQ to symbolize that. So the fact that we were getting so extended, it made us get a little bit ready for a potential pullback. Now, you never know, it could still go further. We've had cases where it's gotten 11%, 12%, or even more above the 50-day moving average line. So it's not an automatic sell signal, but it should put you on your heels, I guess, to be prepared for a move down, and not necessarily a big one, but some type of pullback is usually in the cards. Now, what has been tough about this market is that as strong as the indexes have looked, and especially the QQQ and spiders, the SPY, both S&P 500 and NASDAQ have been looking very strong, but underneath the surface, there's been a lot of weakness. We've been talking about how there's a lack of breadth. There's a lot of the individual stocks are under their 50-day moving average lines, under their 200-day moving average lines. So there has been this weakness underlying the move in the indexes, and it's really been some of these big flyers that's been doing the heavy lifting.
Mm-hmm. And as you said, when we see the indexes, especially the Qs, getting extended, we talk about taking profits into strength. We talk about looking into hedging. So some of those strategies that you can use to sort of position yourself for a pullback. Maybe it's just a minor one, or maybe it's something longer, but those are some of the strategies that you can use in those situations, and potentially coming in handy today.
Yeah. But you definitely, I would say you want to kind of have those strategies in your mind ahead of time. You don't want to come up with your strategy in the heat of the moment, because a lot of times that's where you're just going to be doing panic selling. The best thing you can do for yourself is kind of prepare, okay, if the market does this, what is my action plan? If the market does this, what am I going to do? And if you start thinking those scenarios ahead of time, then when the market does kind of pull back and do, what is certainly normal action after the run that we've had, then you're a little bit better suited to handle the pullback, rather than maybe not handling it the best or selling out of some of your leaders. You can just handle it a lot better.
Right. And the sector rotation was very notable today in terms of growth stocks getting hit quite a bit as well. So we could pull up the FFTY IBD 50 ETF, down almost 5% today. So growth really taking a big hit.
Yeah, and part of that had to do with the fact that a lot of people are watching the 10-year Treasury yield, and the 10-year Treasury yield did jump up today, back above that 1.6% level, and that's something that as that 10-year Treasury yield gets higher, a lot of people start getting concerned about growth, especially the high valued companies, what that does for them. Now, on the flip side, some of the beneficiaries are, some of the financials, the banks and things like that, that are looking at the higher yield as a potential way for them to kind of increase their spread, the longer term yields versus the short term yields from what they're borrowing and what they're lending.
Yeah, and the software group taking the brunt of the damage today here. Asana down about 23%, massive volume. And Justin, before today's brutal action, Asana had been one of the big winners in the enterprise software space, but a pretty definitive sell signal today.
Yeah, and this is where you have to be very careful because there's a lot of people that will start anchoring to where it was and say, well, I can't sell now, I'm down too much. I could have sold, I could have sold on Friday for such a higher price. They will really hesitate to sell when something comes down this much. But you really have to look at the warning sign here. There was a lot of volume behind this move. This was down more than 20% for the day. And it was below the 50-day moving average line, sliced through that line. So it really kind of went through a lot of areas of support. This whole month just got wiped away. In fact, a couple months got wiped away. And so if this is one that you've been riding for a while and you had a good gain on, hopefully you were taking a little bit of profits into some of this strength. But if not, if this was one that you had a lot of conviction in, you've got to make some decisions at this point. If this is something that you bought recently because you're like, I missed Asana on its big move and I want to get into one of the big leaders. Well, if you're sitting on a loss, then you've got to take some even more important defensive action here, because the last thing you want to do is lose capital. And if you've already lost some, you don't want to let it get worse. The famous last words are, well, it can't get any worse than this. It always can get worse.
Yes, so true, Justin. So that's definitely something to keep an eye on. And it's not alone too. It was a lot of other names and software.
And that selling, as you mentioned, it happened right into the close. I mean, it was a lot of these were down a significant amount during the day. Starting off okay in some areas, but certainly midday, and then there was a little bit of a rally, and the close was just the S&P 500 was up for a good portion of the day. It was actually showing relative strength versus the NASDAQ, but that selling into the close was something that really kind of knocked a lot of things down.
Mm-hmm. Well, if money is flowing out of technology and software, where is it going to? Well, steel may be one area, with Nucor showing a strong gain today and signaling a buying opportunity.
Yeah, so this was a breakout. I mentioned on the show that I do have shares of this myself, and I actually was picking this up a few weeks ago, even below the 50-day moving average line, which is not my norm, but this was something that we keep on getting into this sector rotation. So I wanted to get myself in a position where with some of these stocks that were pulling back and potentially showing a bottoming action, getting in as they were showing strength again. So this is one that I picked up then. Today, it was an actual breakout. You're seeing a lot of strength in some of the out of favor areas. We're going to talk about financials in a little bit, but Nucor wasn't alone. Steel Dynamics, the ticker symbol on that is STLD. That was also a strong bounce off of its 50-day moving average line. So you have some action here happening in the steel stocks, and if you look at this is a legitimate breakout. I'm not adding shares myself just because, hey, I've got a low average cost. Given what the market is doing, I'm not trying to get super aggressive right now. So I'm just going to hold the shares that I have. But this is something where we did have a position on this on the leaderboard as well. Quarter position, and we moved that to a half. So there's a lot of different ways to handle things based on where your entry is and where you're at in the market cycle. And so if there is some rotation happening, this could be an area to look at where the money may be flowing to, because you see that there was a lot of volume in that move today, about 47% above its average volume.
Yeah, there sure was. And Justin, well done on getting an early entry here. And I think that is a very good point about trying to spot those subtle signs of sector rotation before it's really obvious, like today. And maybe this breakout is going to spark a really great move in these steel names, but having that early entry has allowed you to really capture a fantastic move in its early stages, setting you up for a nice return here so far. So I guess that's why it's important to be looking at those weekly industry group changes, and those industry charts to see what's out of favor and maybe turning around before, again, like today, it's a little bit more obvious.
Yeah, and that's one of the hesitations I had to adding shares at this point, is because it seems like a lot of the breakouts, by the time it gets to the breakout, it's almost too late. But I think you could make an exception in this case, just because this is an area where money was flowing to on a day when it seemed like it was flowing out of a lot of your traditional leadership names.
And a lot of volume, like you mentioned. Well, let's also take a look at financials with the XLF ETF after coming down to the 50-day line, bouncing off of that level today. So another potential buying opportunity here.
Yeah, and I like how it's really kind of getting this multiple levels of support. If you look at this area of congestion that it's had, this area of resistance that it's hit a number of times, it finally got above that, but now it seems like that level of resistance is now acting as a level of support, and that also coincided with the 50-day moving average line. So the fact that this was able to close relatively well, I mean, it was not at the top of its range, but when you consider that it was a little bit of a gap up from Friday's close, there was a good amount of movement here. You could certainly be looking at some of the individual stocks, but one way to play it is just to go with an ETF, because it's hard sometimes to get super excited about banks. They're all going to kind of act in a similar way sometimes, just based on those yield spreads. So XLF is certainly a way to play that. Or if you want a little bit more juice, you can always do FAS, which is a 3x leveraged ETF on the financials. But keep in mind that with that bigger return on the upside, the 3x, it also comes with that extra risk on the downside. 3x is also something that you can see on the downside. So you have to make sure that you're managing your risk appropriately.
Yes, that's right. Well, we went with FAS on Swing Trader, but the risk is very clearly defined at these current levels. So thank you for that, Justin. And thank you all for tuning in for today's show. We'll be back with more tomorrow on IBD Live. So we hope you join us, our daily morning live stream. David Ryan joining us once again on the show. Always looking forward to his return. Investors.com/IBD Live for more details on that. And we'll see you there also right back here tomorrow afternoon. Bye, everyone.